Good morning, good afternoon, and good evening, folks, depending on whatever time frame that you guys are based. This is Naeem Aslam, Chief Market Analyst at AvaTrade. I've been in the market for a very long time. I've been trading as a hedge fund. I've worked as a hedge fund trader for Bank of New York Mellon. I've also worked for Bank of New York, for Bank of America as an equity trader as well. And at several different firms, I've had the research. And at AvaTrade, I work as a chief market analyst, as I've explained earlier. So all the research is pretty much conducted by myself. On a daily basis, the articles, the videos, the tweets that you see, they are pretty much coming from me. Now, that's a little bit about myself. Now, let's look at today's webinar, which is, every single Wednesday, as you know, that we do hold this master class series of how to trade stocks and how to trade indices, and of course, how to trade the FOMC and then US non-farm payroll. But for today, the focus is on indices. The US indices is where we will keep our most of the focus on. And we will try to find some important opportunities within these markets for you guys. Now, as always, the first thing first, before we continue any further, it is important for me to go through the slide of this warnings and disclaimers. Anything which will be discussed in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, in terms of contact details, it is quite an important one, folks. So, when you are trading those indices, when you are trading those stocks, the Forex pairs or commodities, and when you see all of a sudden those huge or humongous moves to the upside or to the downside, and you are not sure what caused that move, and then you're waiting for the tier one media such as CNBC, Bloomberg, Reuters, and Wall Street Journal to provide you all the information, the best way for you guys to get that information quick and fast and very concise is through Twitter. Because as we all know, Donald Trump is very active on his Twitter, and because of that, a large number of other corporations, a large number of other lawmakers, political influencing people, they have also started to tweet, and then other analysts, other major banks have also started to use Twitter as a medium. So if you see a major move to the upside, if you are on a Twitter, it is very likely that you will get all the notifications directly on your mobile phone, so you will not have to worry about anything with respect to what has caused that move. In fact, the Twitter notification explain you pretty much everything, that what caused the move and why the market has moved up or down. So the Twitter handle for myself is right over here, Naeem Aslam 23, and for AvaTrade it is of course AvaTrade. I will show you guys how to get the notifications directly to your mobile phones in a bit as well. In addition to that, on YouTube we have our channel AvaTrade. If you are kind of a person who likes to listen rather than read, then of course this is the channel for you, because within 2 minutes of a video I explain everything in a lot more detail and in a very digestible manner for you guys to understand what exactly is going to move the market, why the market is moving higher or lower, where are those buy and sell opportunities as well. And for those traders who do have a lot more skilled knowledge, and then they're skilled with trading, I also produce a higher level of a video in which we discuss technical analysis. So let's go out and then let me show you how to find all of that information first of all. So Here is my Twitter channel. As you can see, that is the handle NaeemAslam23. And then when you will follow, you will get all the notifications. And as you can see, I'm fairly very active on that, explaining about that, what exactly is going on with the earning seasons, because today was the day. Today is the day when when we're supposed to get these numbers, like the Bank of America, their earnings came, which was one of the big Wall Street giants, very, very important bank, and then Goldman Sachs, and of course then Wells Fargo. All of these three banks have produced their numbers. The numbers are pretty much there right in front of you, and if in a pre-market, you've already seen these stocks trading to the upside. Similarly, yesterday we had Goldman Sachs was today. Yesterday we had JP Morgan and Citibank coming up with their numbers as well. So that was pretty much, again, very similar sort of a situation. But one thing which is very clear from these numbers is that banks are a lot more optimistic now, and they're putting less money for defaults. And then, of course, I've done this a little bit of a let's say a voting system, where I'm asking you guys that what do you think is the biggest source of concern for the US economy, whether this is a coronavirus pandemic, whether this is US election, or is it a stimulus. So as you can see, a lot of people believe it is not pandemic, it is a US election, which is the biggest risk. So this really shows you that what is out there which is really impacting the market. And in terms of AvaTrade, of course, we are verified on Twitter, as you can see right over here. So make sure that you follow the right account, the account which has a tick size right over here. That is the one that you wanted to follow. And then right over here, you see all those information about the markets, and then some sort of a price levels over here as well. Now, in terms of AvaTrade's YouTube channel, which is right here, there are several different videos, and on a daily basis, I'm also hitting the YouTube live, where it is really an opportunity for you folks to get involved there and then learn about markets and ask any questions if you may have at the same time as well. So let's get back to our presentation and then see what exactly is next on our agenda. Now, AvaTrade has its own platform, trading platform, which is called AvaTrade Go. So I'll highly recommend. Well, I can't really recommend, but I will suggest that you guys should have a look on that. And then there's another unique product which is on AvaTrade's platform, which is called AvaProtect. It's a revolutionary one-click risk management tool. It is self-explanatory what exactly it means, and available on the AvaTrade web trader, and of course on the AvaTrade app as well. With AvaTrade Protect, you can purchase protection against losses for a defined period after opening a position. So basically, it's an insurance policy, but if you are not sure whether the price is going to go up or down, so you can use this one as an insurance policy. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into your trading account. The only cost is the AvaProtect fee itself. So again, that's very much self-explanatory right in front of you guys. Now, agenda. Why to trade indices? This is what we will discuss. The inverse of indices, the fund flow, defining levels, and defining strategies. So these are some of the things that we will discuss in our analysis. Now, as always, we're going to bring out the MT4 platform on to begin with, and then we will take things from here. So what do you have right in front of you right now? This is your S&P 500 chart, right? This is the daily chart, as you can see right over here, because the daily chart is selected. And the price on a daily time frame is very much reaching a very critical price levels. Of course, I will explain all of that in a lot more detail, and I will explain all about what the different price levels are over here as well, like, or the 3 moving averages that you can see right in front of you. So we will talk all of that in a bit, but before we do that, why do we really trade indices? The reason that we trade indices is because, as a trader, as a retail trader, we do not have a lot of sum at our disposal. So what we kind of wanted to do with that is, we wanted to make sure that we can get a good exposure, well diversified portfolio. So for example, if you want to trade, Facebook, Apple, Microsoft, Amazon, and other stocks like that, you will see clearly that these stocks are very, very high in price. So you need to have a lot of money to buy, like, even 10 shares of Amazon, which is trading at a very premium, at a very, very high price. Similarly, if you wanted to trade other stocks like a Google's Alphabet, again, the price is quite high. And recently, Apple, did its break. What it did was, there was a stock split, and now the prices are lower for Apple. So obviously, it made things a lot more easier. It's just like how Tesla did it as well. But the thing that I'm trying to emphasize over here is that if you want to buy any of these stocks, which Tesla is at 476, Facebook 276, for Apple, so Google 1567, then you have Apple 120 nearly. You will need a lot of capital to trade that, a lot of different stocks. And then you are also looking for diversifications within the stock, so that is not an easy task as well. So what we do in those circumstances is that we go and then we start trading the indices, because what these indices do, first of all, is they give you a huge exposure to large number of stocks by trading one simple index, by one simple instrument. For instance, S&P 500 right over here gives you an exposure to literally all the top 500 American companies. So this really explains how good this particular instrument is, because by trading S&P 500 index only, you get an exposure to all the 500 stocks. Similarly, by trading NASDAQ, you get an exposure to all the top 100 tech stocks, American companies there as well. So again, you don't have to have like some specific stocks there to trade, but because when you buy NASDAQ 100, you have everything within that. So this again makes it quite a unique product in its own capacity, or over there. So similarly, when we talk about the Dow Jones, if I just bring out the Dow Jones over here, the Dow Jones also represents the top 30 American companies. By trading this, you get an exposure directly to top 30 companies. So once again, very, very interesting, but because obviously the moves are quite big, but these indices as well. So rather than waiting for a stock which doesn't move that much, by trading indices, you are pretty much sure that these indices are likely to move higher quite a lot, because as we know, the Dow Jones has the ability to move all the way to 1,500 points a day. But usually the index will easily cover 400 to 500 points. So if you are a day trader, so indices do make a lot of sense for you, because what you do is, you look for a buy or a sell opportunity on any particular day. And then by the end of the day, you may want to close your position before you go any forward from there. So that is why it is quite an interesting one. So hope that makes a lot more clear to you guys. Now, In terms of the leading and the lagging index, the next part of this is obviously in order to measure that, we have to look at the price with respect to its moving averages. So the one in a pink right over here, this is your 50-day simple moving average. In order to put that, you go to insert and then you go to indicators right over here, then you go to trend and then your moving average right over here. So what we see from the moving average is that how far the price is trading from its moving average. Because the higher the price is from its 50-day moving average, that means that index has obviously is a lot more stronger. Of course, there is another way of doing that as well. So the platform which I'm about to show you right in front of you, this is a Bloomberg platform. So right over here, we have three different indices: S&P, NASDAQ, and of course the Dow Jones. The NASDAQ index is up year to date 38%. So there is no doubt that the NASDAQ index is your leading index so far this year. And after that, what you have is your S&P 500 index, which is up nearly 9%. Precisely, it is up 8.7%. So that further indicates that, okay, after NASDAQ, the second position for in terms of indices strength is your S&P. Or in other words, it is your tech stock which is very much maintaining the rally. It is your tech index which is leading the rally for this particular stock market, and that is why we are seeing massive movement for tech stocks. Same, but after that, it is your S&P. The index, which is still positive for the year, it is up by 0.5%. But it is the lagging index. It is not the most strongest index among the other indices is your Dow Jones, because it is up only 0.5%. So that further clarifies this particular element that, okay, that this index is obviously the lagging index. Now, that is one of the strategy to look at it. Now, the second strategy to do that, as I was explaining to you guys, is like look the price action from its moving averages. Now, clearly the price is trading well above that, and when we look at the S&P 500, again, we see that the price is trading quite above its 50-day moving average, but not as much as the NASDAQ. So clearly, that further confirms our earlier argument. So the third one is for the Dow Jones. The Dow Jones is also trading above its 50-day moving average, but it is not trading that high up from its 50-day moving average. The importance of the 50-day moving average is that whenever the price crosses above this 50-day moving average, like it did over here, the price usually it starts to move in the upward direction. The trend goes in the upward. But the moment the price goes below this 50-day moving average, like it did over here, that confirms that, look, there's a lot of weakness. But right now, we have this particular element where it says that the price has moved above the 50-day moving average. So as the price has moved above the 50-day moving average, this confirms that the bull trend is very much in play, and we are very, very likely to continue this trend to the upside. And this particular analysis is no different when we are talking about other indices as well. Like for instance, if we look at the S&P 500 index, we can see a number of places where the index crossed above the 50-day moving average. So right over here, when it moved above the 50-day moving average, we had a test here, we had a test here, but the price didn't cross below the 50-day moving average. So we had this massive rally for the S&P 500 index. But then when the price did cross below the 50-day moving average, just right over here, we saw a little retracement just right over here at this particular junction. But then again the price started to move above the 50-day moving average, and now we are seeing another upward rally for the S&P 500 index, and this shows that the S&P 500 index is really likely to continue its journey to the upside. Now, similarly, we're going to have a look at the NASDAQ as well, and then reaffirm our point that how important this 50-day simple moving average is. Again, what we see from the 50-day moving average is that the price crossed above the 50-day moving average right at this particular point. And when it happened, look what happened to the price. The price went bananas. It went straight to the upside right up to this point. But then after that, at this particular junction, when the price started to show a bit of a weakness, we saw a little weakness, but the price came into another important area, which is your 100-day moving average, and the 100-day moving average pushed the price back to 50-day moving average. And the moment the price crossed above the 50-day moving average, now we are looking at a double top pattern, possibly a double top pattern. A double top pattern is when the price comes into the forms the two tops, just like this is the first top and this is pretty much the second top, but we still need the price to go a little bit more higher into this area to form the double top. And if the price fails to break above those zones, then it is very likely for the prices to move lower from there, and then the journey starts again. The one possible journey could be towards here, the other possible journey could be towards its 50-day moving average. So that is what pretty much happens with this one. Now, in terms of technical price levels, in terms of where are the opportunities, let's have a look at the S&P 500 index initially. Now, on the weekly time frame, first of all, what we see is we need to go into a weekly time frame. What we see on the weekly time frame is the price is about to challenge this particular area, the area which we defined earlier, the all-time high. This was the all-time high. This area is the all-time high for S&P 500 index. Now, obviously, the price has gone into this area. As you can see, it is in this area right now. So what we are looking at is that the price is forming the double top. So very, very likely for the prices to move to the downside from here. But we don't know how far the price is going to go. But we do know one thing for sure, that yes, the upward trend is very much in play. Even the recent retracement which happened failed to push the prices back towards its 50-day moving average, 50-week moving average, because now we are on a weekly time frame. So that means retracement can happen, but whenever that retracement will happen, the first point of action, the first support zone is going to be right around these price levels where we have these broken red lines. This is your first price levels. Let's actually do this. We're going to move the red lines towards our resistance zones, which is right over here. We're going to move the support lines right over here so that we know the green is our support zone and then this is our resistance zone. So now the price is entering into this area. Now, of course, there is a stronger possibility that the price may actually break out of this zone to the upside. So that is fine. If it happens, then we are going to put our stop loss, so that we're going to move our support zone to the next level, so the previous resistance, which is I mean, like currently this is the resistance, but if the price breaks above that, then this will become a previous resistance. The previous resistance will become a support. But in order for that to happen, we also need for the price to break above this downward trend line, the RSI downward trend line. So it definitely needs to see this one for the prices to really move to the upside. So any questions so far? Okay, I see that everyone is pretty much on board. Yes, hello everyone once again over here, people saying hi. All right, okay, so now what we're going to do is we're going to do the similar price action for the NASDAQ as well, because obviously NASDAQ is your leading index, one of your leading indices. So it is quite an important one for us to keep an eye on that one as well. Again, from a weekly time perspective, what we see is that the price is trading very, very above its 50-week moving average, and that is what we're pretty much we are looking at. But what we are also looking at is that if there is any retracement, because I like how this recent retracement happened, the price was very much away from its 50-week moving average. So this is again confirms our earlier argument that why this particular price is likely to continue its journey to the upside, because the recent retracement, the 3 weeks of retracement that we've experienced, failed to bring the price even closer to its 50-week moving average. We stayed well above those price levels, and because of that, the price is still very, very bullish. So I'm going to draw my price levels for you guys, for those investors who like to trade, take a longer term trade. So this is your immediate support level in terms of the price, and then this is your immediate resistance level. But if the price breaks out of this particular resistance zone, a highly likely scenario, then remember this becomes your support. Then wait for the price for a retracement in here, and then the price will continue its journey to the upside. So finally, I'm just going to do one more bonus before we call it a day, and that is going to be your gold price. Let's have a look at the gold price, see what exactly is going on with the gold prices as well. Now, gold prices are we first of all, we are speaking on a daily time frame, so the price is very much trading below this downward trend line, right? So the price has failed to pretty much break to the upside. In addition to that, the price is in battle with this 100-day moving average. We certainly want the price to to continue its journey to the upside. If that happens, I would be a lot more positive, but if it doesn't, that means more weakness ahead. And if more weakness creeps in, then this is the area of support that we look at. And in terms of resistance, we are looking at these areas of resistances that we really wanted to do. All right, folks, that's all for today. Happy trading and good luck to you guys. And I'll speak to you guys next week, same place, same time. Thank you.